Then I come to discover this new December low indicator. This one actually argues that the January Barometer shouldn't be as reliable, or we shouldn't rely as much. So this indicator, the December low indicator, was actually signaled by Jeffrey South, indicated potential market trends based on the December closing lows of the Dow Jones. But it was created by Lucien Hooper, a renowned Forbes columnist and Wall Street analyst since the 1970s. Hooper actually set and challenged the January Barometer and its first week as indicators. We saw it in the previous episode, signaling potential randomness or manipulation during holidays, shortened weeks. The focus should be, instead of the December low, breaching this low in the first quarter signals warning. So we're about to end next week, the month of March, and this is one of the indicators that may be followed. The December low, closing low for the Dow Jones last year was 36,100. Right now, the Dow is trading at around 39,000. So I don't think we're going to see So monitoring the December low, well, according to Hooper, in the first quarter, if the Dow actually breaches to the downside, it's a crucial sign for the markets. Historical updates support this. When the December low is breached, a significant market downturn often follows. But then follows something interesting that we can see times when the December low was breached, we saw gains for the rest of the year after initial further declines. So when the Dow Jones breaches for the first quarter of the year, the December low, we can see some downturns in the market, but afterward, we can see a reversal to the upside. Out of 37 occurrences, 37 years of breaches of the December low in the first quarter, the average decline of the market was 11.1% to its lowest point. But despite these declines, 19 of these instances resulted in full year gains for the market, for the Dow Jones, after reaching these year lows. Only 2 years, since 1952, the Dow experienced further declines. Those 2 years were actually market drops were recorded, and the December low was not breached in the first quarter. 1974, which have it here, significant downturn due to the 1973 oil crisis. Then 1981, the stock market was affected by high inflation, which I did not know, but it was at 10%, with interest rates the highest they've been ever at almost 15%. And 1987, with the Black Monday that occurred on October, Dow Jones fell 22% on that day. So you can see it has some accuracy, this indicator. What are some alternatives for this December low? Well, both December low and the January Barometer have their inaccuracies, with 8 errors and 9 flat years recorded. If December's low is not breached, the January Barometer and January indicator trifecta often offer more guidance for the market predictions. This is a graph for the years the Dow fell below the December low from 2000 to 2010. What I'd like to highlight here is actually here we can see in the first column the December low. The day it actually crossed it to the downside in the first quarter of the following year, and that crossing to the downside here on the middle column, it's the low point of the Dow Jones for that year. How much on the cross low it actually went further down after crossing it, with an average drop after crossing the December low of about 14.6% for the first decade. And the following year, we see only 3 years of them, 2008. For 2010, 11 and present, it's almost similar the same. The average drop has been around 11% after the Dow Jones breaches to the downside the December low. But since 2011, we've seen actual full year recovery to the upside. The last column, we can see that. That's how much actually covered at the end of the year, the Dow Jones. And since the 2000, the average drop from the December low indicator is 13.2%, while the historic since 1952, it's 11.2%. I did not include since 1952. It was a lot of data, maybe paying more attention to the 2000 and present. But yeah, I found this pretty interesting to be, besides the January Barometer and January indicator, that I was skeptical at the beginning since I discovered this, but then I found this new indicator and...
Nice, this is cool.
Yep, so that was for the January indicator.
Very cool. Oh, well, I'll know what to watch for January.
December low indicator, sorry.
Well, yeah, I know what you mean. I know what to watch for the end of the year. we have another crazy rally, which I'm not taking this Santa rally with a grain of salt this year. I'm going to be very, very cognizant of it because I got killed the last one. It was like my year of gains just wiped, not the full year, but like a decent amount of my gains were lost because of that. So I'm not taking the Santa rally very seriously this year. But thank you so much for putting this together. Let us know if this is something you're going to be looking at, how you feel about it. Thank you so much, Luis.